Hello and welcome to a brand new episode of Majlis and Markets with your host Hassan Javraj. Majlis and Markets aims to bring you thought-provoking conversations with influential leaders in Islamic and global markets. In today's episode, we're diving deep into the world of foreign direct investment. For many countries, foreign direct investment, or FDI, is a vital driver of economic growth. This can be done through things like job creation, tax revenue, and technological exchange. FDI also faces challenges, however. Challenges including data collection accuracy, regulatory hurdles, and unfavorable domestic economic policies. Adding to these complexities, and despite its importance, the Organization of Islamic Cooperation, a bloc representing countries including the UAE, Saudi Arabia, and Malaysia, contribute to less than 8% of global FDI. To shed more light on this, we're joined by Courtney Fingar. Courtney is a leading expert on FDI and a business editor with more than 20 years of media experience. During our conversation, Courtney and I spoke about several topics, including the benefits of FDI, the challenges surrounding data accuracy, and the landscape for FDI within the OIC. Courtney Fingar, welcome to Majlis and Markets. Good to have you here.
Thanks so much for having me.
Courtney, you've got a very interesting background. I've done a bit of research for this conversation, and I know you and I have mutual connections and friends. But your background in the FDI world, and indeed your background in journalism, is really fascinating for people who don't know. Could you maybe give us your background story?
Well, sure. I'm originally from the US, and I went to study journalism there at my local state university, the University of Alabama, which has very good journalism programs. So I was very happy with that. Afterwards, I went to work for a few years in Washington. I thought I wanted to be a political journalist, and I worked for a publishing group there called National Journal Group on a wire service that was covering environmental policy. And it was great experience, but wasn't quite what I wanted. And I eventually got a job with a business publication based in Washington called Global Business. And that really sort of ignited my interest in international business and also covering business as a journalist. Also, it was my first time to get some interesting business travel. I really wanted to be living and working in the UK, so I did a master's degree at the University of Edinburgh, and I focused on international and European politics with a special focus with my dissertation being about FDI. So that started to lead me down this path. And I was very fortunate that after Edinburgh, despite, having visa challenges, I guess, I got a job at a small publishing company called the ARC Group. And it was a role editing a trade finance publication. I knew nothing about trade finance, so it was a very steep learning curve because it's quite technical. But it was great experience to learn how to run a magazine and at quite a young age. 2 years after that, I was headhunted by the Financial Times, who had recently launched a publication focused on foreign direct investment called FDI Magazine. And it's probably no exaggeration to say it was absolute dream job, because by then I was really into the topic of FDI, of international trade and investment and business, with it being in that topic, but also produced by Financial Times, an elite media organization. It was a bit of a dream. So I took over that quite new magazine, spent 15 years there, kind of made it my own. And those 15 years were spent traveling the world, dozens and dozens of countries on assignment. The opportunity to interact with and interview the highest level of political and business leadership, just super fascinating. But I also developed a utter passion for the topic of FDI. The reason I love FDI is it is that meeting point between business, politics, security, finance, but also social issues and everything. It all kind of comes to play in this world of FDI, and it also matters a lot. It's a strategic imperative for pretty much every government on Earth, with only a very few exceptions. So it's important, it matters, it's high level. So that kind of made me, a journalist, but more than a journalist, an FDI specialist. I left FT in March 2020, sort of right as the world was imploding, by total coincidence, and launched a publication called Investment Monitor, where you also joined, but sadly after me. But after a few years of that, a year ago, I went independent. And now I run my own consultancy called Fingar Direct Investment. And through that, I still do journalism. I'm a contributing editor at a media group called Real Asset Media, where we're looking at the connection between investment in real assets and traditional FDI. I'm enjoying that very much. I have a column in Forbes where I write regularly now on FDI. But I also do consulting, advising governments on the attraction of FDI and how they tell their story to investors. And I've always spent a lot of time moderating events. So I'm now also a professional event moderator and advise business events on their content. So a lot of juggling now, but everything I do is still related to the topic of FDI.
Fantastic, fantastic. And before we get into the specifics of FDI, Courtney, I read somewhere that you actually did a lot of reporting in Iraq. Could you tell us a little bit about that?
Yes, then that's probably, if I'm choosing my most interesting time period during my Financial Times career and in my career in general. This was in 2009. There was an opportunity to go as a guest of the U.S. military, who were inviting me as a journalist to come look at the story of economic reconstruction. I had never been in a war zone before. I was a little bit used to swanning around conference halls and fancy hotel lobbies and ministerial buildings, not really doing the flak jacket helicopter thing. But it was too interesting to pass up. This was at a time when it was, 6 years after the invasion. So Iraq was trying to get back on its feet, but there were still a number of enormous challenges. Security was still a little bit patchy, although it had improved from the worst days. So I ended up going 4 different times. And not always with the military later. I just had my own contacts in Iraq and would just have private security and work just solely with the Iraqi government and business community, which I absolutely love. So I went 4 times between 2009 and 2011. And sadly, I've not been to Iraq since then, but I remain very interested in it. And I'm actually thinking it may be time to revisit it and see what the developments are there.
Yeah, no, it seems like over the past couple of years, there seems to be, well, for Iraqi standards, it seems to be quite stable compared
Yes,
to its previous history.
that's
Uh,
right. Seems so anyway.
yeah, no, and definitely, I think Iraq is a interesting country to look at in the FDI. Speaking of FDI, Courtney, I really want to get an understanding. You've been in this industry for a while, with specifically regards to FDI. Try and help our listeners understand what exactly is FDI.
Well, that's a very good question. And there are a lot of technicalities around it. In the world of FDI, we spend a lot of time arguing a little bit about about definitions and what counts as FDI and what doesn't. But in the broadest sense, it is a company from one country making an investment in another country. And you can, by some measures, count, for example, a merger, acquisition, or joint venture. But in the purest sense, it usually, what's known as greenfield FDI, is setting up a physical facility. So let's say a U.S. company putting a call center, a factory, a logistics center in another country, putting a physical footprint and adding headcount. That's classic FDI. Again, you can also wrap into that other forms of investment such as M&A and so on. But I tend to focus on this productive FDI. greenfield FDI, because the government entities that are charged with attracting FDI, who are called investment promotion agencies. And I should probably mention that one of the hats I wear is that I'm advisor for the World Association of Investment Promotion Agencies, which is the global body representing those government entities charged with attracting investment. They are usually measured in terms of their KPIs and their targets on creating jobs and bringing that productive investment in. So that's the FDI that matters most, but you could put other things in that bucket if that makes sense.
Yeah, it does make sense. I think when you were giving an introduction about yourself and the background, you mentioned about why FDI is important. Could you maybe like dig a little bit deeper, or like give us a little elaborate on like why FDI is important to so many economic activities?
Sure. And as I said, it's a strategic imperative for most governments, most of whom have agencies, ministries, and so on, charged with attracting investment. And this is at the national level, but also state and provincial level and city level. And in the US, even counties at the county level. This is because FDI, number one, brings jobs. So especially this type of productive FDI that I mentioned is a job creator, and that's very important at all levels to the economy. Can bring know-how, so bringing international expertise, technology, skills, so training the local workforce, for example, not only giving them jobs but teaching them new skills. There's also a financial benefit, of course, in the taxation that these companies pay. But by creating more jobs, they're also creating more payroll taxes and so on. And then, of course, one company coming, especially in industries that cluster. So if you get an automotive factory, for example, then you're usually going to get suppliers, and then you have all the services supporting it. So there's quite a big amplifier and ripple effects of major foreign investment projects. And that's why it matters, because even though it's this macro thing that maybe the Minister of Finance cares a lot about, it really has an impact at the most ground level of people's lives in terms of providing jobs for them, skills, and their livelihoods, and also can sort of revitalize entire economies or communities. So an impactful, high quality investment coming in can really turn around a place. Now, there are obviously downsides and risks to FDI. There are way too many stories to recount of companies coming in, especially in the extractive sectors, resources-based investments where you have environmental issues and pollution and exploitation of local workers. But that's becoming less and less tolerated. And in the era of ESG and sustainability, a lot of companies are now focused on not just doing the least amount of harm in the places that they operate. Now, this harm sometimes still happens. We have to be realistic. But there's a big focus on being good corporate citizens in the places that they operate. And actually, conversely, sometimes, if depending on where in the world these companies are coming from, they're often bringing higher standards related to environmental protection, worker protections, and so on than is the case in the local environment. So they can also kind of raise the bar in terms of the expectations. So in short, FDI matters a lot. Most economies, now you need everything. You need a healthy local industry as well, but very few economies could survive these days without FDI.
Yeah, it seems like FDI does take a while to realize, right? I think like when you mentioned about the greenfield, like so a company wants to set up a factory, or wants to set up a plant or call centers or do some kind of activity in another country. Do you think like it takes a lot of time to realize the benefits or the advantages of doing this kind of FDI?
Yes, and this is why this type of FDI, greenfield FDI, it is much longer term, as you've said, and it's less reactive. So that's why you see speculative investment, stock market investment, and all that, capital markets, it's all you see wild swings in investment levels because it can be like very reactive. But when companies are making a greenfield investment decision, especially if it's something substantial, a production facility or so on, they're making this decision with an eye to the long term, and they don't easily reverse these decisions. But it also takes a while for them to come to fruition because they'll need to do their study of where they're going to put this facility, make all the planning, do the negotiating with the government. Sometimes the physical facility needs to be built. They need to recruit. So you're talking years. I've read different statistics, but the average seems to be 3 to 5 years for a greenfield investment sort of decision to sort of turn into a real project. And then you need the time to see the actual impact that it will have on the workforce, on the economy. So we're talking long horizons with all of this.
Yeah, and I think you mentioned this in your previous answer, but there seems to be like a bit of a difference between financial flows and capital markets activity and FDI. What's the difference there? Like, for example, if we take a country like Turkey, it's been through a bit of a difficult economic period over the past 5 years. They seem to have returned to more conventional or, vanilla macroeconomic policy making. But when you look at the FDI levels, for example, not specifically to Turkey, but like when they return to normal macro policy, it doesn't seem to be FDI flows don't seem to be returning, but although the financial flows seem to be flowing. Like, what's the difference there?
Yeah, exactly. And it is because broader capital flows can be much more reactive because of the nature of them. So if you're talking about FDI and you're going to, put a physical facility somewhere, again, it's long term, and these decisions are not made overnight. It also makes FDI greenfield investors much more cautious. They just will have more skin in the game. It's harder to reverse these decisions. The stakes are higher, so they will be much more cautious, and they'll take much more of a wait and see attitude when there has been volatility somewhere than financial investors.
And how is FDI data collected? Is it done through the ministries of finance, or is it done through like trade ministries, or like you said, the World Investment Promotion Agencies? Who collects the data?
Well, all of the above. So you will, when it comes to general capital flows, central banks will collect that information. Within those broader capital flows, there will be pure FDI data lurking around as well. Also, you have multinational institutions. One of the best sources, for example, is UNCTAD's, the United Nations Conference on Trade and Development, have FDI statistics. To get those statistics, they will use a combination of these government sources, but they're also, let's say, data collectors and intelligence providers in the market, which I'll get to in a moment. And it's so they'll sort of take all those sources and try to make sense of it. OECD, much like UNCTAD, will collect and publish FDI data, again, collating from the various sources. I believe World Bank has data as well. My go-to source is usually UNCTAD because, again, they're taking it from all the sources available, but making their own judgments about it, about what counts as FDI and what doesn't. And this is really where things get very difficult. I always say with FDI, especially with greenfield productive FDI, you can never capture in any data set every project. It's impossible to know. It's sort of like catching grains of sand in your hand. All you can do is gather intel on as many projects as you can, and through that get a picture of what's going on. So when it comes to the private sector entities, they tend to be focused on greenfield FDI. So the main players would be FDI Intelligence from Financial Times, where I spent so many years. They have a data cross-border investment tracking service called FDI Markets that's tracking greenfield projects. The way they do that is they do data exchanges with these investment promotion agencies. So those agencies do collect, some better than others, but they tend to collect information on what projects they've won. So you can do data exchanges, asking those IPAs to tell the projects they've tracked. You have company announcements. Now, not all companies announce their FDI projects, but a lot of the bigger ones often do. You can do web scraping. So you're searching for references in local media all around the world and in a number of languages for keywords like project announcement, investment, factory, so on. So it's all, again, just trying to collate. Then it gets kind of vetted by their team. Again, parsing through every single project. Can this be verified? Is this an FDI project or something else? Investment Monitor takes a very similar approach. So again, also collecting greenfield project data in a very similar manner. And the likes of UNCTAD, for example, use FDI markets data to feed into their broader, I guess, pool of FDI data and projects that they're collecting. And then there are other providers that are tracking just the M&A. So if you want to get the full picture, you can take M&A data, you take the greenfield data, you take what the governments are reporting and try to piece it together. But there's just no really exact way to do it because you'll never be able to track and register every FDI project globally.
Yeah, it seems I was going to ask you, do you think similar to macroeconomic data, do you think a lot of it's susceptible to like window dressing or kind of manipulation of statistics? Do you think there's that kind of risk?
Absolutely. And the trickiest part is when it gets into the value of the investment and the jobs created. So the purest measure I tend to prefer to stick to is just counting simply the number of greenfield projects because that you can do and you can stand by that. So again, there may be projects that you're missing because you don't know about them, but of the ones you're counting, it's a number. But when you get into the value, it's really hard to unpack because let's say a company will say there's an announcement either by the IPA, by the Investment Promotion Agency, or by the company itself, or both. And they say, oh, company X is investing 500 million in this location in Poland. So we have to trust, first of all, that is the figure. But when is that when is that money actually landing? Because it's usually phased. So if you say there's going to be a $500 million investment, obviously you don't write a check and that money, let's say, lands in the account, or you do anything with that money on day one. It's phased over time and circumstances can change. So it's a projection, right, of how much they anticipate in investing in that facility in that location over X number of years. But circumstances can change, so the eventual investment can end up being more or less. So this is very, very woolly. And with FDI markets and the other services, you pretty much just have to always say that disclaimer: estimated, estimated, estimated. And the same with the jobs figures. And what those data services also do is where to arrive at a value in order to be able to talk about FDI flows in total in a region or globally, that if the figure of the investment is not announced, they do an estimate. So what a typical type of facility like that, how much CapEx would it involve? So they do an estimate. Likewise, jobs figures are very tricky because again, there may be an announcement and the company will say, oh, this is going to create 800 jobs, but over how long? When are they doing these hires? And do they eventually actually end up creating 800 jobs? It's very hard to say. And usually don't track these things over time. Likewise, the data providers will do estimates of the jobs figures when that hasn't been announced. So again, they'll just look at what would be a typical kind of job creation figure for a facility of that size. So they're doing the right. I'm not saying there's a problem with the methodology because it's the best methodology that is possible under the circumstances. But when it comes to CapEx values and jobs figures, you kind of have to take them with a grain of salt.
And I think you said your go-to source is UNCTAD, right? Why would you trust UNCTAD more than, say, like national governments?
Because UNCTAD are taking the information and data that are provided by all these sources, but viewing them through their own lens and quality checking it to the best that they can. And they have a team of experts doing that. So they don't just take at face value what they're given. They're taking all the data they're getting from these sources and interrogating it and trying to make sense of it. Even the figures that they're producing, for the reasons that I've just said, can never be treated as exact, because that's impossible. But it's probably the best measure under the circumstances that we have of what's happening in the FDI market.
Yeah, very true. Speaking of FDI, Courtney, we've the last 4 years have been it's easy to, or it's safe to say that the last 4 years have been quite difficult for the global economy.
Yep.
Um, you've been in this industry for a long time. I think you said 15 years with the FT, among other things. But how would you say the FDI sector has done since, say, 2000 to today? And then maybe if you could like talk about what your thoughts on FDI is on today. Do you have any thoughts on that? Or
Sure. Well, I mean, I think there have been periods of volatility, and it's usually brought about by global crises. So there was a dip in FDI after, for example, the events of 2001. Then there was a big ramp up in FDI again. And I guess FDI's heyday, in the sense of seeing big volumes and big numbers, was all right before the global financial crisis. So you saw these big numbers coming out in 2006, 7. Then you saw a dip in the numbers as the world kind of grappled with the crisis. Then you saw a rise again. You saw another FDI boom, as it were, and from around 2000, let's say 10, 11, 12, 13, 14, so on. We saw some pretty healthy increases in FDI. COVID ground all that to a halt in terms of that growth, and we saw major crashes in FDI after 2020. Things have been very dicey ever since then, because the market usually dips and then starts to recover. The momentum of the post-pandemic recovery got halted by geopolitical crises. So as the numbers were starting to recover from the COVID crash, you have war, geopolitical tensions, trade wars, interest rate issues, and all of that creates an environment of uncertainty and heightened risk and greater caution, especially by greenfield investors. So the recovery didn't really take root as was hoped. Last year, so the latest figures from UNCTAD, there was expected to be a decline in 2023 for all those reasons I just cited. Their preliminary figures for 2023 were showing actually a 3% increase in FDI. Now, this isn't their final figure; they're still tallying, but this is the preliminary figure. I know, Hassan, you might have written a news story about this on FDI or Investment Monitor, if I'm not mistaken. That was a bit of a surprise bump, but that's still fairly tepid growth. So my expectation, and I guess the expectation of most of the people that monitor these types of things, is that we're still in for a bit of a rough ride, because there's too much volatility, too much uncertainty in the global economy, and especially in the geopolitical realm. So it's unclear what 2004 or 2005 will hold, but I wouldn't be expecting any huge growth figures coming out.
how much of do you think the struggles in China, in particular? I know the Chinese economy hasn't been doing too well. They had a lot of challenges, or still going through a lot of challenges. How much does that play a role in FDI figures, do you think?
It plays a very big role, because China is, a big destination for FDI, and it's also a source of FDI. So any difficulty in the China market, and we have seen decreases in FDI into China, but also a slowdown in Chinese outbound investment. And so that definitely plays a role. The other big player is obviously the US, which, when it comes to greenfield FDI, the US remains the number one destination and also the number one source. So anything that impacts US companies' ability and interest in overseas expansion is going to also have a major role to play in global FDI flows. The US is still hanging in there fairly well despite the volatility, but UNCTAD is showing a 3% decline in FDI inflows into the US last year. which suggests that even that kind of perennial strong performer is struggling. Maybe the most alarming bit of data is that advanced economies are doing better in this period of volatility than developing economies. And obviously, although every country needs FDI, it matters a lot more in the developing economies. And in particular, there are big decreases in investment in the most vulnerable economies. And this is all a bit of a red flag in terms of meeting global development goals.
Yeah, no, definitely. I think it's a mixed picture, I would say, across the board, especially for the emerging markets. Courtney, one thing I wanted to talk to you about was about FDI in OIC countries. So for our listeners, OIC countries is the Organization for Islamic Cooperation,
Mhm.
which it's if you want to describe it, it's like an organization or an entity of 57 countries, majority Muslim or Muslim majority countries.
Mhm.
It's a very vast block, if you want to call it that. I wouldn't really call it a block, but more just cooperation entity. But it's got members including very wealthy countries like the United Arab Emirates, Saudi Arabia, where it's headquartered, Qatar, Malaysia, Indonesia. But then on the other end of the spectrum, you have like very I would say less economically developed countries in Africa. Um, but the one thing, Courtney, I wanted to ask you is like when I was doing research on the OIC, I saw that the figures, there's 57 countries in this block, but it accounted for only 8% of global FDI inflows. So I was wondering, like, could you give us like high level thoughts, like why this block only represents 8%?
Sure, and I think it's a little bit related to this dip, the struggles that a lot of developing economies are having. One thing, a pattern that tends to emerge is in times of volatility and when there are global crises, you see a flight to safety by investors. Now, you talk a lot about that kind of flight to safety in capital markets investors, but you see it as well in traditional FDI investors. And in the time periods when we've had the global financial crisis and all these other problems, you will see increases in investment in places like the US, Canada, Germany, the UK, places that are seen as safe. So I think the group that you're talking about, it's very hard to generalize because this has a lot of countries with all their own individual dynamics, and it's quite a diverse group. So it's very hard to paint them with a broad brush. But overall, they all are experiencing the challenges that developing countries tend to face when it comes to attracting FDI and maintaining steady levels of FDI.
Yeah, like if you look, I think if you looked at the World Investment Report, which was commissioned by the UNCTAD last year in June, I think, it mentioned that the UAE, for example, if we take the United Arab Emirates, it received, I think, probably the most FDI inflows or one of the most FDI inflows within the entire world, including advanced economies.
Mhm.
Um, like if we take the UAE specifically, I mean, it's been trying really hard for, say, I would say the last, say, 20, 30 years. Dubai is very famous. Abu Dhabi is there with the oil and the other Emirates as well are trying to do their own thing. If you look at the UAE, what are your thoughts on them and their FDI journey so far?
UAE is a very, very successful case study on FDI attraction. And Dubai is arguably now the FDI capital of the world by a lot of measures. At the city level, it attracts more FDI than anywhere else. It's also now seen as the hub of the FDI market. I went a lot of the big conferences, the conversations, all the action, the center of gravity in the FDI world is very much in the UAE at the moment. They've just done a phenomenal job in attracting FDI, moving up the value chain, making it a global hub, attracting talent, number one, creating jobs in professional services, but also making it a transit hub with logistics activity. Just an overall very strong offer, and it does have a feeling of stability. So in this sort of era where there's a flight to safety, a lot of investors would view the UAE as one of those kind of safe environments now. And what you tend to see is when there's volatility in a region, the locations in that region deemed to be the most stable will see an increase in investment. And so I think with the UAE, it's benefiting from a lot of current global trends, but it also is a result of just a lot of work being put into their investment offer, and making the place a hub for business and investment. And it's just been very successful. And you see Saudi essentially trying to mimic exactly what Dubai's done in that realm.
Yeah, sticking with Saudi for a second, what are your thoughts, or what were your thoughts when they announced that, foreign companies or headquarters of foreign companies have to be based in the kingdom in order to do business with the government?
It's a bit of a bold gambit, a little bit black, but a little bit like FDI blackmail. But they're trying to be bold, because they have big sort of FDI ambitions now. And a lot of companies, I mean, I still think that it will be hard to dethrone Dubai as that regional headquarter and that regional hub. And it's much more of a known entity, and there are a lot of reasons for that. But I think if you're trying to challenge the king of FDI in the region, you maybe need to be a bit bold and think outside the box. So I haven't really looked at the numbers as to, how many companies they've managed to attract in that way. But I would just say it's a matter of using the leverage that they feel they have to try to achieve some very ambitious FDI goals.
Yeah, on a couple of episodes, we had Tim Callan, who was the former IMF chief to Saudi, chief economist to Saudi, and he basically was a little bit perplexed because I don't know if you saw the news, but Saudi basically at the end of last year or towards the end of last year, Saudi changed its calculation for its FDI inflows, and then all of a sudden there was this big spike in like FDI, but they didn't really explain too much the methodology. But do you think I think it goes back to your point that you mentioned, right? The methodology of calculation can also have a big impact on FDI sentiment, right?
Well, definitely. And you always have to treat with a little bit of skepticism the self-reported figures, that governments release, because it's definitely in their interest to make the numbers look as good as possible. And you can get almost any outcome by tweaking the methodology. So I'm not saying at all that's what they've done. I haven't looked in any depth whatsoever with Saudi self-reported FDI or their methodology. But in general, it's a little bit difficult to take the government figures, but also you're never comparing like for like, because one government may be using a certain methodology, another using another methodology. And that's why, again, you have to take all the data that's reported, interrogate it, and then try to apply a standard methodology across countries if you want to make any comparisons.
Yeah, and then if you look at like other countries, for example, if you look at Turkey, like we mentioned at the beginning, Turkey, FDI doesn't seem to be flowing there. Do you have any high-level thoughts on Turkish FDI inflows?
Yeah, and I'm not much of an expert, so I don't on the Turkish market in particular, so I don't want to speak out of turn. But a lot of times with big emerging markets where the opportunity is undoubtedly large, it usually comes down to that sense of stability, but also stability in the investment environment and the kind of ease of doing business and all of that. So when you're seeing, I guess, inflows and FDI numbers that aren't as big as that country should warrant, it usually points to investor concerns about the business environment. And you can see that across other large emerging countries. Bangladesh, for example, is a huge developing country that should get a lot more FDI than it does. And the number one reason that it doesn't is issues with its investment environment.
Yeah, just on Bangladesh, do you have any thoughts, high-level thoughts on Bangladesh's FDI ambitions?
Well, I don't know. I've not spoken with them. I mean, they have a very active investment promotion agency, for example, that works very hard. So they do have FDI ambitions. They're developing a lot of special economic zones. They have been successful, obviously, in attracting production facilities in areas like textiles, but they've struggled a bit to move up the value chain. And that's what they need to do in order to succeed. There also would be some issues with another major trend that's evident in the FDI world right now is friendshoring. So You're seeing increases in FDI flows between countries that are politically friendly and aligned, and decreases between countries that are, let's say, on the outs. And, the recent elections in Bangladesh, for example, and worries that the elections were not fair, worries of autocracy there, the threat of sanctions by the US and the EU, it doesn't exactly help efforts there to attract inward investment. So if you're a US company or EU-based company, you may just stay away rather than get involved in a market that your governments are talking about sanctioning, and where there are concerns about rule of law, for example. So that's making things quite difficult in Bangladesh as well, even though, again, it's a market that would have a lot of potential otherwise.
What are your thoughts on like new sectors, new or emerging sectors for FDI? Do you think things like AI are ripe for FDI investment, or do you think countries, not just in the OIC, but generally, do you think like a lot of countries will want to develop it domestically before opening it up to foreigners?
Well, AI is definitely a big one. And AI is one of those things that now it cuts across so many things that it's hard to even call it a sector. It's just part of everything. But data sources show that AI related jobs and skills are the most in demand globally. So locations that have skilled workforce in AI are going to be better able to compete in the industries of the future. So the FDI industries of the future are the same kind of industries of the future in business in general, and those are technology related sectors, especially underpinned by AI. We've seen enormous growth in recent years in FDI and renewables. It seems to be slowing down a little bit, but that's going to continue to be strong because of sustainability goals and energy transition objectives. That will continue to be a hot sector. And of course, technology comes into play there. The technologies around environmental tech, renewable energy will continue to evolve, and those will be growth sectors of the future. Of course, there's obviously automation, Industry 4.0. That's really also just about continuing to advance techniques around production, and a lot of developing countries again get caught in that trap where they're not the production techniques and the technology and that ability to move into Industry 4.0 holds them back in their ability to attract investment. So these are a few of the industries that are worth watching, and that most locations need to be kind of au fait with if they want to compete for FDI going forward.
Very true. Courtney, as we bring the podcast to a close shortly, you mentioned earlier on about some of the risks that are taking to happen in 2024 and 25. We have a lot of elections taking place across the world. We had Russia, if you want to call it that, an election. We have an election here in the UK soon. Nobody knows when that's going to take place. We got obviously an election in the US. How much does geopolitical risk play a factor in the FDI for this year and going forward?
It's massive. And I've, keep reading a statistic that half the world's population, live in locations where there will be elections this year. So it's a pretty big turning point for the political dynamic in huge swathes of the world. And elections do matter, and any instability that those elections bring. And so, again, with the US being the major source and destination of FDI, the potential instability and chaos of either a second Trump administration or another contested election and post-election day violence, which there's a very high possibility of, is going to cause a lot of jitters. And elections can kind of hold back investment in general, even if there's something sinister at play, simply because it makes sense to wait and see what the political landscape is going to be before you move ahead with investments. So I do think, there's also doesn't appear to be any let up in the short term in terms of war in Europe or in the Middle East. And all of these factors are going to continue to make investors extremely cautious. So I think geopolitics, national politics, and geopolitics are going to continue to loom large, and they're most likely going to continue to weigh down FDI levels.
Yeah, and the other question I had linked to the previous one was there seems to be, like, over the past couple of years, we've seen BRICS extend its membership to countries of the global south.
Mm-hmm.
Do you think we're going to get into a situation in the next, say, 5, 10, 15, 20 years of where countries will have to choose to receive investment from, say, a Chinese-led or a BRICS-led world order or the US-led world order?
It's happening a little bit already when, related to that. Friendshoring is maybe a bit of a flippant term, but we are again seeing this trend of greater investment and trade between countries politically aligned and reductions between places where they are not. And that trend is probably going to continue. A lot of developing countries have quite rightly tried to have it both ways, and they want and need Chinese investment, they want and need US and European investment, but in a time of heightened political tension, it may become harder to I don't want to say play both sides because that sounds overly cynical, but to have those relationships with both. And there may be some pressure to get off the fence, as it were. And that's a shame because that will do quite a bit of harm to places in the world that really need investment.
Yeah, I agree. Courtney, you mentioned about your consultancy. So what are your other activities? What are you up to these days?
Well, that that keeps me very busy. I'm traveling a lot, being in the world of FDI, which I enjoy, but it does crowd out other things. I'm notionally based in London, and I'm, very busy with my various activities, journalists, consulting, and otherwise. And I'm kind of gearing up. A lot of my activity is based around the conference season, and we are gearing up for the spring conference season. So I will be on the road fairly soon, doing events in the UAE, Luxembourg, Poland, and beyond. So that's really my focus right now when I'm having, I guess, the quieter time before event season. I'm just working, producing content, studying the trends, and supporting my clients as best I can.
Fantastic. And Courtney, how can people read your research? You mentioned about Forbes and you mentioned about the other place, but are you active on social media at all?
Yes, the best place to follow me is LinkedIn. I do share my activities there. I share content there. To check out Forbes, I do have an author page, so you can literally just type in Courtney Fingar Forbes and you will find my page, and you can follow that page and get updates. I have a new article that will come out later today. But otherwise, following me on LinkedIn is the best place to see what I'm up to.
That's great. Courtney Finger, it's been a pleasure. Thanks for coming on.
Thanks so much. I enjoyed it.